Hi fellow traders, I'm making this video to share my EUR USD analysis with you. So right now we are on EUR USD daily time frame, and I'm gonna give you a little brief of what recently happened economically in the US and European Union. So we'll start with the recent article which was published by BlackRock Research Institute. So you must know that BlackRock is one of the biggest investment firms in the world, and it has a sister company, or you can say some sort of division into research field. So they published an article almost 2 weeks ago, and if we look at their views, they mentioned that Euro area economy is comparatively slower, and there are more. They mentioned that there is more room for European Union to cut interest rate, and they also mentioned that market overpriced interest rate cut in US dollar. So this was a positive news for dollars. It was not a news, it was a view of a research institute, but they are significant, and their views is considered significantly by institutional traders as well as individual traders. Anyway, going to the second point. So on Monday from Frankfurt, Reuters published an article according to what Christine Lagarde said. So there are 2 pinpoints. Number one, she said inflation is, I'm not giving you the direct speech. She's simply mentioning that inflation will return to 2% in timely manner. So there was no specific time period she mentioned, but she said timely manner. And if we go back, then she had mentioned mid of 2025. So she didn't extend beyond the mid of 2025, and she stand on that stance. So it's negative for European Union. So if inflation is going down, definitely they will cut interest rate, and it can happen in the next meeting, which is gonna take place on October 17. So and she also mentioned that she is going to take this factor into account in the next meeting in the October. So yes, so Monday was the last day of September, so that's why she mentioned October. So both of these statements from Christine Lagarde are clear statements that they're going to cut interest rate, even though there is no recent forecast about the what will be the exact interest rate released on October 17th. So there is no such thing on calendars now, but we can believe that they're going to cut the interest rate based on what she said on the Monday. Next, we are going to look at what happened in the recent releases from the European Union and the USA. German CPI less than forecast, and market was already expecting the overall European Union CPI to be less this month by 0.4%, and it came 0.4% came less. Sorry, it came 0.4% less than the forecast on Tuesday. So CPI and German CPI and Eurozone CPI recently were released this week, and we are gonna make the plan for the remainder of the week. And last thing is in this analysis is about what Jerome Powell said on Monday. So he was speaking in National Association of Business, National Association of Business Economics. I think that was NABE. That is the name of the association for which he was speaking on Monday, and it was a very long speech, and it was long conversation. I was just watching in the Bloomberg, and there's something I pointed out of that. It was even like humorous conversation, not only just about the economy, also about his personal life sometimes, because the anchor was asking some questions which was not totally all the time about the economy. But what I figured out from that entire video was Jerome Powell in that event of National Association for Business Economics. What I figured out from the whole conversation, that he was more confident about the US economy. He was more confident about the labor market condition. And he also spoke clearly about JOLTS, jobs opening, and he said that a market can, these things are solid now. And if what I'm trying to conclude here is he did not drop any sign of further interest rate cut anytime soon in this whole event. So that's what I'm saying. And Then we saw recently that JOLTS came better than forecast. We saw recently that ADP came better than forecast. So he showed confidence in the employment situation, and we have two data related to the employment, that JOLTS job openings, and ADP NFP, which both came better than forecast. So there may be a chance that the NFP will also will come better than forecast. All right. Anyway, then what we are going to do, market already understood all these things before I made this video, and market has already been falling. You can say EUR USD has been falling for 4 consecutive days, and we are making the plan for remainder of the week. So plan, of course, is to sell EUR USD. Target can be decided according to technical analysis, and here we are on the chart doing the technical analysis. So market is making some sort of double top. This one is the left top, this one is the right top. Top was something around 112, neckline is this, which is something around 110, and the target is going to be 108. And recent 4-day move has pushed the RSI value on this daily time frame already to 48. So if this is going to close something below 1050 today, it's right now trading at 1044. If it's going to close below 1050, I'm sure that the today RSI will close below 50, and which is a clear indication of a beginning of a downtrend. So now let's understand how we are going to trade this. So if we measure the risk and reward from here, it's like we have almost 250 pips on the reward, and risk, if we think of 112 as our SL, it is 156. So our risk is less, reward is more, but what we are going to do is to mitigate the risk even more and maximize the reward even more. How we are going to do this, I'm going to take you to 15 minutes time frame. If you want to understand why suddenly I'm going to 15-minute time frame, why not 4 hour, 1 hour, then you need to go to so many educational videos I have made so far, and so many articles Kion posted so far, because this is not sufficient, and I cannot make this video very large explaining those things. So simply let's go to 15-minute. There is a way to determine what to do in the technical analysis, and I have already determined 15 minutes. So yes, we are on the 15-minute. Why 15-minute can't be disclosed right now, but yes, 15 minutes. So coming to the 15 minutes, we simply have to understand the price action, and we have to take our sell positions on all the levels from where market will seem to start going down. So we will initially wait for the upward retracement, because if you see, market has not been retracing much. Last time after this fall from this point to this point, there was very small retracement, then sideways consolidation, then again fall, then little retracement, sideways consolidation, again fall. But what we can see right now is that the fall today is slightly smaller, not slightly smaller, pretty smaller even. I mean, it is half of the size of previous two swings. If we look at this swing from here to here, and another this swing here to here, these are kind of like kind of similar to each other. So let's look at whether they are similar or not. So I will simply draw a line. This was the previous swing, the recent swing. Yeah, exactly, AB equals CD, and then a retracement was expected, but market made a new lower low today, and today swing is not even half of this. You can see that, not even half of the previous swing. So this is a slight clue about of the market price action, or you can say market behavior, that this is going to retrace, and maybe 30% retracement is going to at least take place. So what we are going to do is to start opening positions whenever we'll see market returning from any of these levels, and there is no certainty of Fibonacci level. It's not going to return exactly from 30%, maybe 31%, 35%, 40%, 40. We do not know yet. Fibonacci levels simply do not work, if you ask me clearly. But yes, retracements take place, it happens, and when we see market going up and then again forming a candle pattern is nothing but a way to understand the price action. For example, if I go back and if I talk about the condition of market here, for example, when this was made, this first swing down was made, market retraced to the upside, it was going to the upside. And if I plot the Fibonacci level there, then we can find that this was the 30% level. Then market started going down, continued to the upside. So you could have taken a position after this fall, after this fall extended below this previous low. So one position could have been taken here. Then another position could have been taken when market again started going down and then penetrated below this previous low. What happened is this previous low was slightly below the this low. So if you took sell position here, you would have been disappointed that okay, market didn't fall, it started going up. So that's why there is a good idea to trade this, do this trade in a multiple position. Then market went up, again market started going down. Then what we could have done here is to mark this area as the new support, and then we saw that okay, market fell down furiously, made a engulfing bearish candle, this one, and then we could have taken position right here. And then yes, we could have succeeded in both positions, in this position and the earlier taken position, this. So that's why multiple positions should be planned. So similarly, what I'm going to suggest here is, let me first delete the recent Fibonacci which I have drawn, because this is going to make the chart cluttery anyway. So now what I'm suggesting is market can go up, can start coming down from 30, can show you the price action, can give you a bearish candle pattern, and can still go up. So you can take one position here, then again you'll see the similar opportunity that market stops, market returns to the downside, gives you makes a candle pattern to bearish candle pattern, you enter again. So you can split your one trade into 3 or 4 positions, and then you can plan to target all those positions to the downside to 108 area, which is our target on the daily time frame. So let's say we can have a position here, and here, and all positions can target 108. Or maybe we can have a slightly different target based on how market behaves in the remainder of the week, and what happens with the other data. For example, ISM services PMI is going to be released on Thursday, which will give us an idea of how Euro USD is going to retrace. If it will also come slightly less than forecast, just like what happened this week in manufacturing PMI, it will give some relief to Euro USD, and Euro USD may retrace to the upside a little more. Similarly, on Thursday, there is another data, weekly unemployment claims. So if it also comes to be slightly negative, if the claims increases, then Euro USD get a chance to rise. So we can get some more retracement. However, these two data which are coming in the remainder of week before non-farm payroll are not going to change the main trend, the downtrend which already started, and which is based on our other more important economic data and more important economic factors which I already discussed at the beginning of this video. So ISM services PMI and unemployment claims are going to help Euro USD to retrace to the upside. That's my view. And let's come back to 15 minutes. So this is how we are going to trade. We will just keep looking at the data, we'll just keep looking at the price action, and whenever we'll get the opportunity, we'll keep entering multiple positions. And so final point, how are we going to close the trades in case of loss? Anything can happen in the market, despite of my view, your view, or view of BlackRock Research Institute, view of Jerome Powell, or view of Reuters, or whatever. That's why we always need to be ready to close the positions in the loss. So I'm not going to wait for 112 to close the position. So no, 112 is not going to be our stop loss level, or we are not going to wait for any particular day or session to close beyond 112 to close the positions in loss. No, hell no. What we are going to do is to take 1.1150, 1150 as the final resistance. I believe that if it starts going up and it reaches and closes beyond 61.8% retracement, I am taking a reference of a Fibonacci level, although I do not totally believe in it. But it is just not about the Fibonacci. What will happen in the RSI, that the whole strength will again be rebuilt if it will return back. It is hardly now coming below 50. So if market returns back to the upside, and then it goes like this. If this happens, something like this, what happened here, that market came almost slightly below 50, then slight retracement to the upside, it went slightly above 50 and again fell down. It's totally fine, and it will still favor the bears. However, if we will see the big move to the upside, and then this total RSI setup will totally be invalidated. That is why we do not want Euro USD to close any day. I'm not talking about session. I don't want to see any close above 1150 on any day, not today, not tomorrow, not on Friday. So if it will close above 1150, and yes, I'm going to wait for the entire day closing. I'm not going to make a decision based on what's happening in an hour or half an hour or 15 minutes, even though my entries are going to be based on the price action of 15 hours, but my closing is not going to be based on the price action of 15 minutes. Sorry, I said 15 hours. I mean, my entries are going to be based on 15 minutes price action. However, my closing is going to be based on daily closing. So coming back to 15-minute, so now you can understand that if we are taking positions, multiple positions, as market is going to the upside, our stops or our pips on the risk in every position is going to be less and less and less. So this is how we are going to mitigate the risk, and when it will come to reward, it's 108. So that's all in this video. Thank you for watching.